In prior videos, we analyzed the business transactions of Eli's Consulting with the help of the accounting equation and the T account. These tools visualize the transaction and the impact the transaction has on the financial statements. Now we're ready to actually record the business transaction in the general journal, which is step 2 of the 9-step accounting cycle. The 9-step accounting cycle shows us the necessary steps in a manual accounting environment. In a computerized accounting environment, several of these steps are automated. However, accountants spend a lot of their time on recording general journals, or are also called journal entries. In most accounting teams, journal entries are entered into an Excel template and then uploaded into the accounting system where they are automatically posted once the journal entry is approved. To learn about the step-by-step process of journalizing business transactions in the general journal, we'll first talk about each of the process steps and then practice the process by again looking at the transactions of Eli's Consulting Services. There are prerequisites for journalizing the business transactions of the business. First, you analyze the business transactions with the help of 2 tools that we talked about, the accounting equation and the T counts. That's helpful because you're just getting started. Later, as an accountant, you would likely only use these tools for very complicated accounting transactions. So first, analyze the transaction. You do that by first determining what accounts increased or decreased. Then identify the account types for the accounts, and after that, use the dealer mnemonic to find the debits and credits. That will tell you how to record the transaction. Before you do that, though, you would also check the supporting documentation. Your reputation as an accountant is on the line when you record transactions without the supporting documentation or backup. I can't emphasize that enough. You have to have the right documentation before any transaction is recorded. Let's say you've done all that. Then the next step is to obtain a general journal template or form, and in most businesses, accountants use Excel templates. You'd enter the date into the date column, the account name of the account you want to debit into the description column, followed by the debit amount into the debit column. On the second line, you slightly indent and enter the account name of the credit transaction into the description column. Then enter the credit amount into the credit column. And finally, enter a short but concise description on the third line into the description column. Let's practice this concept with the help of Eli's Consulting Services. For the first transaction, Trade and Eli obtained the funds to start the business by withdrawing $100,000 from his personal savings account. Before the accountant records an entry into the general journal, they analyze the transaction and examine the supporting documentation. The supporting documentation for the $100K contribution is a memorandum from Trade and Eli to Sergio Sanchez. Additional documentation might be the deposit into the business's bank account and legal documentation that shows Trade and Eli gave Eli's Consulting $100,000. Accountants care about the supporting documentation and the audit trail, which is a chain of references that makes it possible to trace information, locate errors, and prevent fraud. The audit trail provides a means of checking the journal entry against the original data on the documents. Documentation is critical. The external auditors will want to review the supporting documentation at year end as well. However, sometimes the supporting documentation is confidential. For instance, severance amounts when there are company layoffs. In those cases, the journal entry will reference the person or department that can provide documentation upon request. When we previously analyzed this business transaction with the help of the accounting equation and the T accounts, we determined that cash increased cash is an asset, and assets increase with debits. So we need to debit the cash account. We also said that the monies owed to the owner, Trade and Eli, increased. Monies owed to the owner is part of owner's equity, and owner's equity increases with credits. So we credit capital, a special owner's equity account that is used for the owner's contribution to the company. And we're now ready to record the journal entry. To record this business transaction, we write the date into the date column, the account cash into the description column, and the amount $100,000 into the debit column. We indent slightly on the next line and write Trade and Eli Capital in the description column and $100,000 into the credit column. In transaction number 2, on November 7th, Eli's Consulting Services issued check 1001 for $5,000 to purchase a computer and other equipment. We can see the journal entry documentation, but in a real company, the support would not be sufficient because it does not provide the details of the purchase, model numbers, specs, etc., and evidence that Eli's Consulting paid the information technology store. This document looks like it is a check stub from a checkbook. The accountant's job is that of the guardian of the general ledger, the place where all general journals are permanently saved. And the general ledger is the foundation for the financial statements. It is definitely not an understatement to say that the basis for all financial statements begins with the accountant's general journal and the supporting documentation. The necessary documentation in this case should be a copy of the invoice from the information technology store. The invoice should detail the items that were purchased and should show Eli's Consulting Services as the purchaser. Accounts are responsible for verifying proper documentation before recording any entries. When we previously analyzed this business transaction with the help of the accounting equation in the T accounts, we determined that equipment increased. Equipment is an asset, and assets increase with debits. So we need to debit equipment. We also said that cash decreased. Cash is an asset, and it decreases with credits, so we credit cash. And we're now ready to record the journal entry. To record this transaction, we enter the date into the date column, the account equipment into the description column, and $5,000 into the debit column. We indent slightly on the next line and write cash in the description column and $5,000 into the credit column. And add a description, like in this case, purchased equipment, check 1001, once the proper documentation has been received. In transaction number 3, Eli's Consulting Services purchased office equipment from Office Plus on account for $6,000, and we have the invoice here from Office Plus. The invoice shows an invoice number, date, order number, shipping, and payment terms, the name of the buyer, and item detail for what was purchased. This invoice shows the right level of support. Did you know that many businesses do not record assets for equipment and supplies that cost less than a certain amount, like for instance calculators? The threshold depends on the size of the business. The materiality threshold differs from company to company, but the larger the business, the larger the threshold. The accountant is responsible for the accuracy of the invoice and the payment terms, as well as the proper purchase order number. In addition, the accountant needs to ensure that the correct sales tax is calculated. So if the information is incorrect, it needs to be revised. When we previously analyzed this business transaction with the help of the accounting equation and the T accounts, we determined that equipment increased. Equipment is an asset, and assets increase with debits, so we need to debit the equipment account. We also said that accounts payable increased. Accounts payable are a liability, and when liabilities increase, they increase with credits. So we credit accounts payable. And we are ready to record the journal entry. To record this transaction, we enter the date into the date column, the account equipment into the description column, and the amount of $6,000 into the debit column. We indent slightly on the next line, write accounts payable into the description column, and $6,000 into the credit column. On the third line, we write a short description that summarizes this transaction. For transaction number 4, on November 28th, Eli's Consulting Services purchased supplies for $1,500, check 1002. Again, this is not proper documentation. We don't have an invoice. In fact, we don't even know if supplies were purchased. We also don't have a copy of the check. This would not pass an audit, and I would be concerned if a business owner provided this as a receipt. During an audit, the auditor would ask for the invoice from Office Deluxe, a copy of the canceled check, or other proof that the amount was paid. In some cases, the auditor might even ask for verification from Office Deluxe directly. When we previously analyzed this transaction, we determined that supplies increased. Supplies are an asset, and assets increase with debits, so we need to debit the supplies account. We also said that cash decreased. Cash is an asset, and assets decrease with credits. So we credit cash. Let's now record the journal entry. To record this transaction, we need to enter the date into the date column, the supplies account into the description column, and the amount of $1,500 into the debit column. We indent slightly on the next line and write cash into the description column and $1,500 into the credit column. For our fifth transaction, Eli's Consulting Services paid Office Plus $2,500 and partial payments of invoice number 2223, check 1003. In this case, we have the original invoice from Office Plus for $6,000 as support, but we would also need a copy of the check, or the Zelle Venmo payment record would be good additional support. We previously analyzed this business transaction and said that accounts payable decreased because Eli's Consulting now owes less money to Office Plus. Accounts payable are a liability, and according to the dealer mnemonic, liabilities decrease with debits. So we debit accounts payable. We also said that the account cash decreased because Eli's Consulting issued a check to Office Plus. Cash decrease, cash is an asset, and assets decrease with credits, so we credit the cash account. To record this transaction, we write the date into the date column, the accounts payable account into the description column, and $2,500 into the debit column. On the next line, we slightly indent and write cash in the description column and $2,500 into the credit column. On the third line, we write paid on account, Office Plus, invoice 2223, check 1003. Next, for our sixth transaction, Eli's Consulting Services wrote check 1004 for $8,000 to prepay rent for December and January. Again, this is not proper documentation. In this case, I would like to see the rental agreement and a copy of the check or other payment remittance. We previously analyzed this business transaction and said that prepaid rent increased. Prepaid rent is considered an asset, and according to the dealer mnemonic, assets increase with debits. So we debit prepaid expenses. We also said that the cash account decreased because Eli's Consulting issued check 1004. Cash decreased, cash is an asset, and assets decrease with credits, so a credit to the cash account. To record this business transaction, we write the date into the date column, the account prepaid rent into the description column, and $8,000 into the debit column. We indent slightly on the next line, write cash in the description column and $8,000 into the credit column. On the third line, we write paid December and January rent in advance, check 1004. The remaining 6 general journal entries for Eli's consulting services based on our prior analysis of these business transactions. Please stop the video if you'd like to review the general journals. I hope this video helped you learn about the general journal and practice the concept with the help of Eli's consulting services.